Hello, we are here today with another Skull Sessions and Investor Insights episode here with David Baker of the Land Value Alpha Fund. We're going to talk about that today with David. Yeah, I guess at landvaluealpha.com is where you can learn more about David's fund. I met David many years ago, actually for via geo investing. We became friends over the time, and he's quite entrepreneurial. So it's going to be fun talking to David about his past life and what he's doing now. But before we do that, let's and talk about David's, kind of fascination with water cliffhanger. Let's get into the terms and conditions disclaimers, and then we'll get right into it.
This discussion is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. This is not a recommendation to trade, buy, or sell any companies discussed. We recommend you consult with a professional investment advisor before transacting in any securities mentioned in this discussion. By viewing or listening to this event, you agree to the terms and conditions which you can view in full at msmicrocaps.com.
All right, Dave. Well, how you doing, buddy?
Good. Thanks for having me, Maj. Appreciate being
Yeah,
here.
you've had a lot going on in your life the last few years, or maybe 5 years. Or when did we meet? Like, was it 2017, 18? Maybe we started chatting a little bit
Something like
before that.
something like that. Yeah.
Yeah, yeah. And I think you had subscribed to geo investing, and then I learned more about you through that. You were you had success managing money in the past. I think actually running a business too, maybe selling it. And now you, I guess today are basically running, launching a fund or have launched a fund, Land Value Alpha Fund, all about water. And so, I mean, you and Michael Burry have a lot in common probably on that.
I think we do.
Yeah. So I'd like to, I know this is more about your fund and more going to be about what you're doing right now. I think you're in Montana now. You're
Correct.
like from, I don't know, Miami, Vegas to Montana, or some kind of round trip like that. I don't know where you'll be next, but and congratulations. I think you're married, right? And yeah, it's good to hear
Thank
that.
you. Thank you.
Um, and so let's learn a little about you, David, and then we can get into your fund. So I know you want to concentrate on the fund today, and that's what we'll key in on. But I think it's important for people to understand a little about your journey, just to frame that a little bit. So why don't you tell us a little bit about your life, how you got into investing? Was it something you wanted to do for a long time? Did you just stumble upon it? Did you have a financial background? These kind of things. Uh, and then we'll get into a few other things and then right into the fund.
Sure. So I was a stock jockey since age 13. My grandfather taught me about the stock market. And in my early teenage years, I was trying to get on the phone with Kenneth F. Iverson from Nucor Steel. And I was an early investor with my grandfather's guidance in Nucor Steel and International Mineral and Chemical. What was interesting about Nucor Steel, one of the many things is that they were paying performance bonuses to their employees from the lowest level to the highest level person. And obviously the stock did very well over decades. So I was hooked on the stock market. When I got into college during the crash of '87, I doubled down and it worked out quite well, buying those two stocks more and more, International Mineral Chemical and Nucor Steel. And then when I went to law school, I worked for the SEC for the Division of
Oh,
Enforcement.
as you see, can we end this conversation right now? I didn't know that part about your story. All right,
I was a legal intern for them.
I forgive
And
you.
thank you for forgiving me, Mosh. And what was great about it was not only did I learn a lot, but I learned that I didn't want to be on that side of securities in any form. It was a great experience, worked with great people, learned a lot, but I really was interested in trading and investing. So when I graduated from law school, I worked for Merrill Lynch in San Francisco at their 580 California Street office, had a very good experience there, and then after 3 years, went off and started my first hedge fund, small cap, micro cap, searching for idiosyncratic returns, and ran that fund for the better part of 7 years. It was a very strong performing fund, 42% gross, 33% net, audited returns over almost 7 years. And then I went off to a startup company that I founded called Sector Base that was renamed Revere Data. And eventually it was sold to FactSet Data Systems in 2013. And over a period of time after running the fund and after that startup company, I then got into doing reverse merger transactions. So alternative going public transactions, anything that was not through the front door of the SEC, as they say, but mainly reverse mergers. And we had a bell curve of results. Some didn't work, some were average returns, and some were exceedingly successful. I did that until 2011 approximately, and then the regulators changed the rules where it was hard to deposit securities first under $100 million market cap, then under $300 million market cap. So that really made it impossible to do the deals because you could complete the transaction, but no way to facilitate liquidity for investors. And then at that point, I said, well, I'm going to take a left turn and check out real estate. So I got into real estate, specifically into self-storage. I determined that self-storage and parking lots were what we thought from our research were the most compelling areas of real estate. Why? Because they're highly susceptible, at least at the time, highly susceptible to technology and minimally human resource intensive. So being a contrarian investor, I bought facilities in bad locations, poor condition, low occupancy that no institution would touch, and then turn them around. And then now, 12 years later, we've sold three of the four of them, and a few of them were sold to institutions, very large, multi-billion dollar REITs. And then from there, I re-examined, what I wanted to do, and I started a tech company, and the tech company was sort of like a YouTube, but for business, and ran that for 5 years. And sales started to ramp, but very late in the process. And I decided I needed to do something that would provide return faster for everybody involved, the investors, myself, and something that was more hard asset focused. So focusing on hard assets, I then decided to explore land. And what happened there is that in 2019, at the same time I was doing other things, I started flying around the country, traveling by train, driving, and saying, I want to find a place for the rest of my life that's a resort community or near a resort community. And after doing all this travel in 2022, I found the Flathead Valley in Montana, Kalispell here, Columbia Falls, Whitefish, etc., and said this is an incredible opportunity. And I determined it's an incredible opportunity, not just for personal lifestyle, but for investing because it's very fast growing community, resort town, near Glacier National Park within 30, 40 minutes, two ski resorts within 30 minutes, the largest freshwater lake in the Western United States. And yet still, even up in some of the mountain areas, FedEx delivers, UPS delivers, Amazon delivers. It's got modern conveniences. So that's what drew me to get involved in this area and get involved in land. And then I met a large landowner and I saw what he was doing on the land. He didn't have a fund, doesn't know anything about Wall Street or capital markets, but he knew how to buy land and he knew how to take heavy equipment and build roads and conduct infrastructure. And then through that observation, I realized there was an opportunity not just to buy land, but to buy land, conduct infrastructure, create water rights, and that would create an active layer of appreciation on top of the passive layer of just buying land and waiting. So that's sort of the story how I came in my career all the way up to now and launching Land Value Alpha.
Well, that's a quite a journey. Do you even invest in stocks anymore at all, or are you all in now in land?
I'm all in on land. As obviously I just explained, I come from the stock market, but what I find incredible about this asset class is not only the returns are very compelling, but it's very, very stable. So the volatility is very low measured against every other asset class you could find, not susceptible. The currency devaluation goes up with inflation and just makes it a really compelling asset class.
Now, is it a compelling asset class mainly? I mean, are you talking that from the perspective of where you are now, Montana, or just in general, you think? I mean, when you look at opportunities.
Well, as everybody knows, real estate is regional, but I would say it's a great question, Maj, that anywhere in the US that's in the northwestern US that's in some proximity to a resort town is probably a fantastic place to invest. And putting this active layer of appreciation from our activities on top of the passive layer makes it even more compelling. And then because it's close to where we buy land for the fund, close to resort communities, you get a reset effect where the property goes from being, undiscovered and considered remote to discovered, not considered remote, and development more and more occurs, and you get another bump. So you have a bump from passive appreciation, one from active appreciation, what we do on the land, and one from the reset value when it becomes discovered.
Okay, now we'll get to your presentation in a second, but I have some questions about that a little bit. So, yeah, what kind of I'm curious what kind of returns you're seeing here potentially for you in this thing by doing this, because you're not just buying land, you're adding value to the land, right, and adding value to um, everything there. So I'm assuming that's where you're getting a lot of your return alpha. I don't know.
Correct. Yeah, that's correct. So uh, we're targeting 20% annual returns. We expect, obviously can't guarantee, but we expect to generate 6x in terms of your return on capital in 10 years. And there's obviously opportunity for upside as well. And the passive component of appreciation, we model here in this area, call it Northwest Montana, 5 to 7% land appreciation, not to be confused with residential. And then, as you said, the active layer that we're doing through our activities, so building roads, installing power, drilling water wells, that component of the return drives it up much more than that 5 to 7% from there. And then there's some reset premium that we gain also over time with the land as it gets discovered. But if I had to estimate, I would say something like, 20% of the return, 25% of the return comes from the passive, and something like, 70%, 60% of the return comes from the active component, and the balance comes from that reset premium over time.
Okay. So you're not developing this land, but you're just getting it ready for a developer to come and and want this land because you've done things to it to make it more attractive. Is that what I'm hearing?
Yes, but we're doing the hardest work that most developers won't do.
Hmm.
So we're building roads with switchbacks and whatever it takes to build proper roads to access whether it's a home site or whether it's going to be used for an RV park or whatever it's going to be used for. And we're putting in the power over miles. We're putting in remote power. We're burying 5,000-gallon propane tanks, putting in generator pads with generators, drilling water wells. All that stuff is generally quite foreign to most developers. Not every developer, but
Right.
most developers. And there's some exceptions, like here, there's a company called Discovery Land Company. They're very, very well known worldwide. They're co-owners of the Yellowstone Club at Big Sky. They own 39 resorts around the world, and they're building one right below our first project, which we can talk about. And that's caused that reset premium tremendously. But we had bought the land, 3 years before. But we knew from our research that, again, the area is growing and growing fast.
Yeah, I have had owned some land, some industrial land in the suburbs of Philadelphia, Montgomery County, a town called Skippack, and it was like three parcels. It was a one contiguous piece of land, but it was still the zone as three parcels. And part of the when I got approval for some of the work was I would build a road in there. I put road and that going through the whole, even not I had to be responsible for the road, not just the road that would go through the entire like connected properties to the main. And it was like I didn't want to do that, right? It would have been a lot. And every time, so I forego, I didn't do it. And I was hoping that I would just find somebody that if I found an interested party who would buy the land, that they would take care of that, right? And that became a pretty big obstacle at some time. I couldn't close deals because no one wanted to deal with that piece of it. So obviously if I would have done that, I would have added value to land if it was part of my goal there to do that. So I understand what you're saying there. Yeah. Yeah. So the more I guess the more ready you can make a piece of land for a developer to come in, the better off.
Absolutely. We like to
Yeah.
say, Maj, we do what others can't, won't, don't.
All right, that's nice. So, but I guess I have a question for you. It's you're projecting hopefully 20% returns over the next, was it 10 years you said? Is that what you were hoping for?
Correct. Yep.
And I'm wondering because you're obviously I don't think you're the only person that sees opportunity, and over time, if you see competition, do you think that alpha maybe comes down a little bit? Is that a risk you see?
I don't see that as a risk in the return profile, Maj. I see it as a risk in saturating this market where we need to move west toward eastern Idaho. So, for example, there's 60 million acres of private land in Montana. Of that, 9 million is owned by 13 families, and
Hmm.
the other 51 million is owned by 4,000 landowners.
Okay.
So, as Northwest Montana continues to get more and more discovered and more people are buying, that will, eventually cause us to have to move west to eastern Idaho, but not yet. There's still about 145,000 acres in this area that I'm aware of that can be for sale, of which 45,000 is. And we work with one of the largest land brokers, if not the largest in all of Montana. And most transactions, Maj, are off-market transactions. So you won't see the property, advertised on Zillow, and so we have that access that others don't. Our competition, it almost causes people to chuckle. Our competition is not individuals rushing in necessarily. It's more like family trusts uh, and billionaires and really ultra high net worth people that are using land as their bank.
Okay. All right, cool. I have a lot more questions, but maybe you'll answer them through your presentation. Well, let's have you
Sure,
now. You give us some background. Why don't you pull your presentation up, Dave, and go through your deck, and
sure,
we can have questions maybe during or after that thing. Would be good.
sure. Yeah, just jump in, Maj.
Make sure
Can
it's
you
in
see my screen?
presentation. Yeah, is it in presentation mode? Make sure you do
Should
that.
be. Should be.
Okay.
Yeah. So we're land value alpha is investing in undervalued land. We're creating or acquiring water rights. If it's drilling wells, it's creating. If it's surface rights, it could be acquiring, but we can talk about that later. We're building infrastructure, as we talked about, and we're seeking superior alpha returns for doing this active work on the land. So we've covered this a little bit. There's the components. I think it's worth reiterating. People think when they buy land, you buy land and you hold it and that's it. But again, there's this active component. So we look at land as passive appreciation, active appreciation, and reset premium. Now, in addition to conducting the infrastructure and the water rights that we're creating, there's natural resource optimization. So what is that? Could be timbering some of the forest on the land. It could be acquiring carbon credits, which is now $15 an acre and increasing every year. So it's not just theoretical anymore. You get cash for that. And then quarrying rock. So if there's rock on the land that's aesthetic rock, can be used as aesthetic rock, we're not mining. So we take no construction risk, no mining risk. We're picking up the rock, we're putting it in trucks, we're hauling it off and selling it to rock yards, which can be quite lucrative. So there's a lot of ways we can make money from the land during the hold period where we're conducting infrastructure and creating water rights.
Explain the rock. What was that? What was the rock thing there, David? For that's
Yeah.
new to me.
So say you're buying a parcel of land, and in one of the parcels there's a valley, and in the valley there's rock on both sides.
Yeah.
Okay. And so what you can do often, usually, most of the time, I haven't seen an exception yet, that you can take that rock, pick it up, put it in trucks, haul it off, and sell it to rock yards.
Okay.
And you're not mining, you're not digging, you're just lifting it up and putting it in a truck and hauling it off, and it's very lucrative.
So you said the same thing with timber too. Is that what you said earlier? So you would
Timber,
obviously.
yeah, we can sell the timber, but what we think now, because of where the lumber market is, that you're better off not cutting trees, except when you're making the road, for example,
Hmm.
And the balance of the land, it just stays, other than your development areas across the land, you're just collecting money for carbon credits.
Okay, can I ask a question about this too? I mean, unless you get to it earlier, about about like ethics and community and social stuff. Are you gonna address that later later in the presentation? Should we get into it now?
We can do it now, Mosh.
Yeah. So when you're disturbing, the environment, trees, rocks, whatever you're doing, you face environmental pressure for doing that potentially. And
No,
is that something you
not
can't predict 5 years now how that situation is gonna be? And does that affect your returns?
sure. I guess we can't predict what's going to happen in 5 years, but from a social standpoint, we would think that environmental activists and impact investors will love us because we're basically an impact fund. So our thesis is, and we're going to put out a research memo with not too in the distant future, is that if you buy a 640 acre parcel and you're only need to develop, let's say, 50 acres of it, and the rest is all left alone basically for the foreseeable future,
I see.
you're number one, you're treating the environment well. Number two, you're offsetting carbon, getting paid for it. And number three, for investors, most importantly, your return profile is highest. So
Hmm.
if you took that same 640 acres and you converted it into tract homes, your return profile is going to go down. Why? Because when you look at your IRR, right, and you do this every day as a professional investor, Maj, the costs of the vertical construction and the variable costs and the materials, it's very, very high now. Everybody knows that. So
Right.
actually, your return profile goes down when you do things like that. And so we don't need to use all of the land or most of the land at all.
Beautiful. And is your 20% return factor in some of these other pieces of return, or is this all extra? Like
Yeah, that would just be additional upside from, quarrying rock and hauling it off, carbon
great.
credits, etc.
Okay. So it doesn't make or break the thesis. Basically, it's just additive if you have it,
It's
basically.
just additive if we have it.
Right.
Definitely. And then speaking of additive return, there can be opportunities to lease water rights.
Okay.
We don't recommend ever selling them, but you can lease water rights.
Okay.
That's an opportunity too. So we've done this before and we have the expertise, we have local relationships, and it's not the kind of fund that can be run from a skyscraper in New York City. BlackRock tried to do something not exactly like this, but related, and it didn't go well for them because you can't negotiate an easement from the top of a building, and you have to be standing on site to do this. You have to project manage all of your subcontractors doing their work. So it's important to have the expertise and to have local relationships. It just can't be done from elsewhere. So wherever you're developing land, you and your team need to be there. Core value creation. So we're adding value and gaining value on the properties from all of these activities. One thing we haven't talked about is land entitlement. Uh, and so what that is using different methods of division to divide up the land. So for example, Maj, when you had that piece of land and it was zoned as, three parcels, but it was one piece of land that you owned, what we do here is we can break up the land without having to do a minor or major subdivision, depending upon the piece of land. So, for example, if you have a 640 acre parcel of land, you can chop it up into four 160 parcels. And according to planning and zoning here in Flathead County, you don't have any minor, major subdivision requirements, and it's an exemption because of the size. And believe it or not, overnight, the value of the land will double or more. So if you bought land for $2,500 an acre, you chopped it up from 640 to 4 160s, you should have the land worth $6,000 plus or minus overnight. And if you said, Maj, well, how come everyone isn't doing it? Because you need, a relatively decent amount of capital, let's say $2.1 million or more to buy that 640. But it's an example of how land entitlement increases the value of the land overnight.
Okay.
So what we've done is the different value drivers and shown what we expect in a range of returns for each of these different categories.
Mm-hmm.
AI demand convergence is, for example, selling the land to a data center. Here in Montana, data centers are starting to be built.
Mm-hmm.
This would be an example where we get premium pricing for selling to a data center. Also, if we sold to a developer, wherever that land might be, that's also premium pricing. And that's above what we've modeled, above what we've projected. And it's just additive.
Mm-hmm.
So, water, yes, we're big into water.
Can you go back to that slide real quick?
Yes,
Yeah. So let's go over a few of these here because you have a bunch of stuff here. With regulatory arbitrage, what is that?
that's basically entitlements changing using a method of division to increase the number of parcels.
Oh, that's your time. Okay, okay.
Yeah.
Forestry, we talked about that already. Infrastructure development, water rights. Okay, good. I see
Okay.
it.
So, this is how we generate alpha from water. There's secular scarcity in the Western United States, no different in Montana, except for Montana's a headwater state. So that means when you look up at the mountains and you see these channels in the mountains and the snow, that's what's feeding the rivers. And so, Montana doesn't have the kind of water problem that most others do, but still there's increasing demand and there's increasing scarcity. What a lot of people don't do when they're researching to purchase land is they're not looking at water basins, they're not looking at aquifers, they're not studying well logs, seeing who drilled where, at what depth did they get water, etc. We look at all that stuff and we use that as an information advantage when buying land and understanding where to drill, what we expect, how deep we're going to have to drill, etc. All those things are very important and there's a great return that emanates from an investment in water.
Mhm.
So this is the water rights value creation process. And I think the most important thing is the bottom of this slide here. So we project that for every dollar you invest in water infrastructure, water rights, so drilling the well, putting in the well pump, putting in a pump station, installing cisterns, underground storage for water, you should get 4x your return. So you spent 200K, it should increase your property by 800K. Not a guarantee, but that is what the math, that is what the research shows. That is what example after example in the West and Northwest reflects. Sometimes a lot more if the water rights are sold to a municipality or leased, the returns are even higher. So water
Mhm.
is not only critical for life and critical for the value of the property, but it's quite an accelerant.
Okay.
To install water infrastructure takes 12 to 36 months. 4x in 10 years is about 15% annually compounded. And we're exempt from many of the regulatory aspects of infrastructure, not all, but many, up to 35 gallons a minute in terms of what the well's producing.
So, but Dave, when you're going to buy a piece of land, that land usually will already have water rights with it, right? Is that what you're basically?
Not usually, usually they don't. So
Oh, really?
we're drilling a water well and then we are filing groundwater rights, and which is a 600 is the name of the form, and then we're also filing now, as of 2026, a 602, which says we intend to use all the water that we're getting.
I see. And is there a risk of, I mean, how do you minimize your risk of knowing you're buying a land that's going to have sufficient water for you?
Geotechnical analysis, which we use sometimes, not always. Geotechnical, so diagnostics, well logs, looking at water basins, things like that, aquifers.
And before you buy a piece of land, are you actually pretty much sure there's, I mean, is the contract contingent upon you making sure 100% there's water that you need sufficient for you what you're doing?
That's a great question. We have not done that. We can do that, but we're generally buying where we see producing wells from well logs. And a lot of landowners will not tolerate that as a contingency because a lot of these sellers are very large landowners and they don't have to sell and they don't have to give you that. Now, great question you ask, because there's an exception So, as I understand, when Discovery Land Company bought the 1,500 acres in Lakeside, Montana, quite near our first project, and their well driller is actually our well driller, they mandated in the contract, as I understand, because our driller was drilling test wells. So that means that they had in their contract, we're not closing until we get water. So
Right.
they brought the driller in to drill test wells, and then after that they closed.
Okay. I mean, how much of a risk do you see that in your plan here?
I mean, you could never guarantee water, but I see it as low risk because if you talk to good well drillers, they always say if you drill deep enough, you're going to get water.
And to be clear again, the water piece of this isn't the only reason you're buying the land here, right? It's as part
No,
of.
it's not. It's additive, but there's no reason not to do it because
Sure.
it's additive and you're creating a right that should stay with the land forever.
Okay, cool.
Yeah. So historical track record, the only thing I would like to address here, less additional questions, Maj, is we put this in. This is my track record. And what I think is really interesting is if you look on the right side, the return profile, it keeps increasing. And what we've done is we've gone from residential property to self-storage, which is a business I was in as I described, to commercial raw land in Las Vegas, to forest land. And what you see is as you go from residential to self-storage to urban raw land to tertiary market raw land, the returns keep climbing.
So let's move on to the forest land. So you already done this. If you I mean, how many times you've done this so far to get to generate that case study there
So
of
we
3%?
did this as our first project. We did this as our first project. We bought the land. We locked up the price in 2023.
Mm-hmm.
We went through almost a 2-year escrow. Several law firms, many amendments. There was 100-year plus chain of title analysis. We purchased the land during the escrow period. We planned out everything, and we purchased it for 2.1 million. We put 500K into infrastructure, and we did everything that I described. I'll show you some show and tell at the end of this presentation, some photos of what the project looks like.
Right.
Then you can see, what we have into it, the recent broker opinion of value here, and the returns. And again, I watched some large landowners do this time and time again over some years, and it's a very, very solid investment thesis.
Right. That's great, Mel. So basically over 2 years, you turn that investment over.
Yeah,
And you beat your goal of 20%,
yeah,
like on your first one at least. Yeah.
yeah.
Um, cool. So I mean, how many of these do you want to do at one time? I mean, is it is there a
It's all capital driven. The more capital we raise, the more properties we will purchase. Our goal is in 10 years, $1 billion, 200 properties.
okay.
And
Okay.
now, of course, the properties will be different sizes, different acreage, different prices. And so there's a different amount of work to do on each one. But that is the goal. And investors are not buying into one project, Maj. They're buying a portfolio of multiple properties. And
Hmm.
it's not like many sort of syndicators do. They do, apartment building one, fund one, apartment building 16, fund 16. This is one evergreen fund where each investor owns their pro rata portion of all the properties in the fund.
Okay.
So, manager versus asset class performance. The purpose of the slide is not really to show performance, it's to show volatility.
Hmm.
So if you take a look at volatility here, where my cursor is for land or land with infrastructure and water rights, volatility is very, very low. Similarly, with a timber fund, volatility is very low. But then when you look at REITs, NASDAQ, S&P, private companies, commercial real estate, gold, volatility is relatively high. So that's what's fabulously interesting about this asset class is volatility is low, lack of
Hmm.
susceptibility to currency devaluation, moves up with inflation, and it's just highly stable. It's not a stock, whatever the stock might be, where it's down X percent the next morning and your blood pressure is going up. Not that I don't love small cap and micro cap, Maj, because I was in it all my life. But
Right.
I think the volatility is interesting here, the
Yeah,
lack of.
for sure.
So these are our structural competitive advantages
I
versus.
should say that I just was thinking about that. It's like volatility really can play a part of your CAGR, right? Because you can just because you can do 50% one year or most of the time maybe let's start 30%, but when you have those down years, you got to catch up, right? When you go down, so it hurts your CAGR. So just because the volatility does matter in investing. Yeah.
Absolutely great point. And land, just like most real estate, tends to move with the active layer, which is the infrastructure and what we've talked about, but it also moves with reset events, for example, discovery premium, which same as microcap, discovery premium, and and also it can be other geographic events, which I guess are a subset of discovery, like, for example, Discovery Land Company starts building their lakeside resort next to where other people have bought land. So
Hmm.
it's interesting, but land is never linear, is my point in terms of
Hmm.
appreciation.
Okay.
Structural competitive advantages, the only one I want to draw the audience attention to is the risk as a moat. So complexity will scare away large institutions usually.
Right.
Building roads up steep grades, rock demolition, drilling very deep wells, hauling in, large amounts of heavy infrastructure with lots of equipment. They're not used to it. And this is an interesting career, if you will, because you're merging infrastructure knowledge and project management with financial modeling. So we do a ton of financial modeling. What happens if we put in 4 wells versus 3 wells? What happens if we do the road like this and like that? And what about this material for the surface? And so on and so forth. So all of that affects return. And so it's quite interesting. So what is challenging and might scare away some funds, we run to it. We have no problem blasting through a mountain to build a road or whatever is required. We're quite comfortable with it. We've done it before, and it's definitely competitive moat for us.
Okay.
Competition, we're sure there's got to be other funds out there, but we haven't found one, and certainly not in the Northwest that combines land plus infrastructure plus water rights. You can see there's timber funds, some ag funds, not a whole lot, some natural resource funds. Usually they're mutual funds and they come in all facets and forms, but not usually infrastructure and water. There are a few water rights funds. One's very famous called Water Asset Management. They were the pioneer in the industry. They've done quite well. They have this sort of the whole vertical integration of buying some water rights, buying valve companies in different parts of water infrastructure. Michael Burry, he likes to buy almond groves. Why? Because they need a ton of water.
Interesting.
Yeah, yeah, definitely cool. So our portfolio allocation by geography, starting in Northwest Montana, we'll move west to Eastern Idaho as the next place when we run out of land to buy here and cover the entire Northwest over time.
That was one of my questions. Like, do you want to expand outside Montana? And I guess you do. Yeah.
Sure, yeah,
Yeah.
absolutely. Wherever there's value, you know.
Hmm.
Like for example, you see a resort town and it might have, just using an example, might have 7,000 people, and all of a sudden somebody gets approved to build 300 or 600 homes, then you know it's on the rise because what's coming? Drugstores, grocery stores, et cetera, et cetera. And
Right.
so, you know,
Are you going to zoning meetings all the time to see what's going on there, or reading zoning minutes? Is that part of what you
I
do?
I keep track of them, but I don't go to them all the time. And the reason is because it's a great question, Maj. We're trying to buy unzoned land.
I
So
see.
with unzoned land, you have no setbacks from the boundary lines. You have no height limits for whatever you need to do, but we're not doing vertical construction. And it's easier in every way,
Interesting.
including method of division to chop up
Hmm.
the parcel, let's say from 1,640 to 4,160. So I don't go all the time because it's really more for urban land, which is not where the return profile that's compelling is located.
Hmm. Now, when you say unzoned, but it still has a classification, right? Like agriculture, industrial, commercial. Are you saying like
Well, that's another good question. It's unzoned for development, but it does have a tax classification. So you're
Okay.
right. So you're right about that. So for the first project, it's unzoned, but the tax classification is forest land, which has the lowest tax rate. I think the taxes this year, I know I'm close, is about $400 for 150, soon to be 160 acres.
So does part of strategy include a little going to a land and changing it to a tax zone that you would want to develop on?
If you can. So for example, it might be unzoned land and it might be classified as something else, but you want to get it reclassified as forest land. If you have enough untouched land, and I'm not a tax authority, would need to talk to tax advisors, but that would be a goal, sure, because you'd be dropping your tax rate. Even if it's by 20 bips, 25 basis points, that still counts.
Right,
So
right, right.
so that's definitely a possibility. But if it's already classified as forest land, it's the lowest tax rate in Montana already.
Okay.
So this was the case study that we talked about. I'll do a little show and tell and show some photos of what we did because it's quite interesting on the property. And I think it sort of speaks for itself. Due diligence process. We do all these aspects of due diligence, excuse me. We have a 270 point due diligence checklist. Now, every diligence item does not apply to every property, but it's a master list because we don't want to make any mistakes.
Mm-hmm.
Real estate, when you buy it, you own it, so you want to make sure that you've done everything to understand the land before you purchase it. We also have quite an extensive and expansive financial model. It's got 20 or so categories of consideration, 1,300 formulas, and that's how we value land. So we turn what looks like a qualitative exercise into a highly quantitative exercise.
So do you have a team like a CFO?
We have an analyst.
Okay. Okay.
Yeah, we've got an analyst. We'll add analysts as we need. As the fund grows, what will be there'll be more personnel is really in project managers. So for every 10 or 15 properties, we'll add a project manager. We are our own GC. And the reason we are is it's costing 10% versus 12 to 15% for a general contractor, and they're not the expert doing the work. We probably know more than they do usually about the subs and what we're doing, and certainly more about the land. And finally, we have more control versus, a GC showing up once or twice a week
Okay.
because
Cool.
we're there every day usually.
Hmm.
So development timeline and exit strategy. The fund is a 10-year hold. There is an early redemption provision after 5 years if someone has to get out for some reason. And of equal importance, we're selling the land in year 8. So if investors want their capital back in year 10, we need to be selling in year 8.
Okay. So there is definitely you need this money long term. Yeah. Okay.
Correct. To generate 6x returns, you need 10 years according to our estimates.
Now, is that a common thing in some of the similar types of funds that
Yes.
long term?
Yes, it's a great question, Maj. So in timber funds are generally 10 to 15 years. Agriculture funds are usually 10 years. Um, some timber funds are even longer, but all
Mhm.
of these types of funds in natural resources, timber, ag, etc., they're generally 10 or 10 to 15 years
Okay.
because they need to achieve they need time to do what they need to do on the land. That's certainly for sure.
It makes
And
sense. Yeah.
and then of course they need time to develop the return profile.
Hmm.
So obviously what we're doing, we're expecting asymmetric returns. We're doing deep research. We're using sophisticated financial modeling, tremendous amount of due diligence. And from doing that, we have information asymmetry when negotiating to purchase the land and figuring out the highest and best use of the land. And again, we're directly controlling every single property by managing it ourselves in terms of the infrastructure, water rights creation, etc.
Okay.
So we've proven what we're doing with our first project. We have 18 years of infrastructure experience. We understand the benefits of creating the water rights and the monetization. Our strategy is scalable. And again, we do no construction, no vertical construction, take no mining risk. So it's definitely a risk managed approach with a diversified portfolio.
Okay, great, great.
So, with your blessing, Maj, I'll do some show and tell on the
Sure,
first
just do
project.
it, show it, and tell it.
Okay. Okay.
Is there a lot of tribal land in Montana?
There is a lot.
Does that affect anything? I mean, does that make any your
Well, it reduces the footprint available of land to purchase for sure. There
hmm
are some areas in First Nations land where they let non-First Nations people buy the land. And actually, interestingly enough, some of those areas have expanded in value from a residential standpoint versus other residential areas that are not within First Nations locations. Uh, but generally, it is reducing the amount of available land. Again, not residences.
Okay. That was a question I had.
So, can you see my screen, Mosh?
Yep.
Okay, so this is our first project. The objective was to build a road, install power, drill a water well at the top of the mountain.
hmm
We did that. So this is where we're going. This is where we are. For my curve, this is where we're going. It's about 1,300 feet increase in elevation from this part of the property.
hmm
And first part of the process is surveying the land and planning the road and the road infrastructure. So we did that over about a year and a half period because planning is critical to achieve the highest and best use of the land. Once you've scarred it, you've scarred it. Once you put in infrastructure, you're again reducing the return profile if you're not in the right place. You're not ruining the investment, but again, you're spending more money for the sort of twice. So you don't
hmm
want to do that. So this is where we started to build the road. This was the entry point. So we went through the forest here and cleared this to build the road, began going up on part of the mountain area here. This is our first switchback. What's interesting, you can see the grade here. It was quite steep, but thanks to the miracle of earth moving equipment, we made short order of that.
hmm
So one day it looked like this going up this way, and then the next day it was like this. So
Oh,
we,
wow.
yeah, it's pretty cool. Uh, Sometimes you hit a lot of rock. So here we hit a rock field. Some of it
hmm
we blasted with rock demolition. Some of it we used two excavators. So here one excavator is using a hydraulic breaker to break up the rock, and the other excavator is moving the rock out of the way, using it for support for the road. You
hmm
can get a feel for what the land looks like and the beauty and the nature.
Very, yeah, breathtaking. Yeah.
Yeah. And then this moving through the rock field. And then here again, you can see the grade. This is how steep it is before we finish the road. So it's quite steep,
hmm
but it has to be finished in a way that somebody can easily drive up it. It can't
Right.
it can't be like this when you're done. Yeah.
Jerry Rice will like this though for his obstacle course.
Oh yeah.
He
So
used to
this is
love
what
it.
the road looks like when it's finished.
Ah, nice. How long did that take?
Well, we built a mile and a half of road and pulled a mile and a half of power, put in two 600 amp electrical panels at upper and lower home sites, and drilled the water well, all in one season. So it was about 8, 9 months.
Okay.
You saw this one, Maj, but this is
Yeah.
plowing at the top of the home site in winter.
Uh-huh.
And then this is electrical communication conduits. We use 3-inch HDPE conduit to last 100 years or more. And then we use this orange communication conduit. People say, well, everyone uses Starlink in Montana, which is true. Outside of the city, people use Starlink. But if you have gates and you don't want your gates to be manual gates,
Mm-hmm.
you need to put in some communication conduit for those gates. You're not, opening up two gates or three gates or six gates manually. So you need,
Right.
need to run that. This is trenching. So this is trenching here for the power. And then this is setting up to drill the water wells. So in this case, we drilled our first well at the top of the mountain at the upper home site, and they're backing up here to get up because we hadn't finished the road. So it was quite steep at the switchbacks. This is the drilling rig itself before we started drilling. And we used dynamite to blow up some rock to create a larger area for the water drilling. We had 5 trucks up there, one drill rig, 2 compressor trucks. The compressor trucks are forcing air into the drill to pound the drill harder as it goes through the ground to cover,
Mm-hmm.
cover more depth every day. And then this is when we actually got water at the top of the mountain. So this is about 12 to 15 gallons a minute, which is pretty good for 1,700 feet deep at the top of a mountain.
Right.
And this is what it looks like harvesting natural resources. This is not on the property, but just to give people a feel, just scoop up the rock, load it into trucks, haul it away, and sell it. Clearing trees at one of the home sites that had been timbered. And then we take the timber, we either sell it or use it. And then when we install power panels, we don't use, chemically treated wood and just putting it in the dirt. That's not strong. So in this case, we use steel, which we powder coat. We use concrete. And actually, this power panel here had a tree fall on it recently, and it slammed onto the steel structure. But because it was steel in concrete, nothing happened, and the tree rolled off. Otherwise, it would have taken out $40,000 in equipment.
Wow.
So we try to do things in a very strong, durable, multi-decade lasting way.
Mm-hmm.
So this is the local utility company, Flathead Electric, energizing the vaults. Uh, we put in gates and posts to make the properties look finished. So they've sort of finished looking aspect to them. We use
Mm-hmm.
steel columns and pour concrete inside them and outside. And then here's some views from the upper home site for this property.
Wow.
So this one is looking northeast to Glacier National Park.
Mm-hmm.
This is looking southeast toward Missoula. This
Wow.
is this is not a drone shot. This is standing on the home site.
Jeez. That's breathtaking, man.
Uh, yeah, it's beautiful. Over here, where my cursor is, right around here, is where Discovery Land Company is building their next resort.
Okay.
Right here, so it's quite close. This was this weekend. You can see some more photos here from the upper home site. Flathead Lake, the largest freshwater lake in the western U.S., and some more. So that gives people an idea of, what are we really doing on the land? What does the land really look like? Where does it start, and what does it end up from an infrastructure standpoint?
Mm-hmm. Beautiful.
Thank you, Bob. Yeah, it's fun.
Yeah,
It's
so
fun
that's
to
great.
do.
I have a few more questions here, David,
Please.
and who would your buyers be here? I mean, is it conservative trusts, agricultural operators? I mean, is it? I'm curious who it might be, and are you buying that land with a particular buyer in mind, maybe too, when you buy something?
So we're not buying the land with a particular buyer in land because it's often unpredictable. So say, for example, we tried to purchase land that met all the requirements for a data center, and for whatever reason, we couldn't attract a data center to buy the land, then it
Right.
might not have been the greatest purchase for whatever reason. So we don't have a buyer in mind necessarily when we buy it, but we have a lot of criteria for land that we think will cause the land to be more valuable, or we're confident, I should say, that'll be more valuable. Now, the buyers could be ranchers that want to buy a ranch, It could be luxury home buyers. It could be an RV park operator. It could be a commercial set of structures that a commercial company wants to buy and they want it out from the city because logistically it facilitates their need to service different places all over the state or out of state, but they need a lot of space and they need infrastructure. They need power, they need water, etc.
Okay,
So
excellent.
lots of different types of buyers. It could be agricultural too. That's a possibility, but it depends again where the land is, what's the elevation, is the land facing north or south? That has a huge effect on temperature and on snowfall.
Okay.
A lot of factors.
And in terms of so what is the goal of your fund here? So you have with that first project you did, was that your own money? Or did you actually raise money for that? The
Yeah, the
first
first project was my own money. My wife blessed it, and so
Bless it
we
now. I did well.
but she's happy with the infrastructure. The other day she said, "Oh, I love our road." Whoever thought a city girl from Belarus would be like, "Oh, I love your road." But yeah, it was our own capital for the land, for the infrastructure, for all of it. And we wanted to do our first project and prove that the thesis works, not just for these large landowners, but for others. And then that was the impetus to launch the fund. So we
Okay.
started this project long time before we launched the fund, and we just launched it, and we didn't start the marketing actively until about a month ago.
So how much money do you want to raise around this first kind of push?
I mean, if we could raise $20 million in the first year, I think that'd be fantastic.
All right.
Minimum
And
investment's $100,000.
how many properties do you think that's gonna? I mean, I guess how fast do you deploy that money? Is the question, I guess.
Great question. So let's say we raise $20 million this year. We can deploy the capital within months.
Really?
Yeah,
Great,
it
great.
doesn't take a long time, but you have to invest just like the way you do research, Maj, and that's why you're the foremost microcap, analyst and firm in the country because you dig deep and you don't miss out on any details. We do the same thing, but we can still work through the list. In fact, I would say what you do maybe is more difficult because you never really know what you might have to address. With land, it's pretty straightforward. The checklist doesn't really change much.
And you don't have to watch the volatility if there is day to day. Even there is none, but it's so
That's true.
yeah, that's great, man. Is it? I mean, is there anything else I might have missed here that I should address here, Dave? Because this is not one of my expertise areas here, so I'm wondering, what does it look like? And if you're doing well, do you think potentially you get bought out? I mean, is that by a
I think so. I mean, we didn't start the fund with that intention. We started the fund with the intention of creating tremendous value for everybody involved and doing something that is an asset class that hasn't been ventured into much because of the challenges and the knowledge and expertise. But I do think that assuming we grow the fund to a relatively large number, I think the BlackRocks, the Blackstones, pretty much any large asset manager in the world will want to have this opportunity.
Okay, and I guess I do have one last question on the water rights opportunity. So you're doing things to make I guess water ready, right? And make sure it has the water rights.
Mhm.
Is that for you to make it more valuable on a sale, or do you actually just want to can you can you lease the rights while you're doing all this stuff here?
You can lease the rights, but the end goal is to make the property most valuable.
Okay,
And you can generate income from leasing water rights. It's not an exotic thing here in Montana. There's even an emerging water bank. Think of it like a water trading exchange that's launched in the last couple of years and it's growing every year in volume. But still, you're not going to make the kind of return, whether it's leasing water rights, selling timber, collecting carbon credits, quarrying rock, that you will from, the terminal exit.
sure. But you're still going to try and do that in the meantime, though. You're going to
Yeah,
yeah.
we'll employ all of those methods and whichever ever methods are appropriate for that piece of land, for sure we'll do because why not capture the return?
Right, right, great. Okay, cool. All right, man. Well, I guess this has been great, man. I mean, we've been I guess we should have done this a long time ago, but we would have been talking about a different venture before, though, if we would have done it then,
I think you're right,
right?
Monch. I think you're
So,
right.
yeah.
They
Well,
say Montana is the last best place. I think this fund is the last best part of my career.
I will say it's a little sad, that you're not doing stocks anymore. I'm just talking.
Well,
You
yeah,
know, it's okay. It's
yeah.
okay. Yeah.
I think had you and I met maybe a decade or two earlier, I'd still be doing it.
Yeah. Well, yeah. Well, maybe. Yeah. I don't know.
Yeah, we'll
It's
see.
it's changing, but that's a topic for a different time. But excellent. Well, thanks, Dave. We'll be here with David Baker for our Skull Sessions Investor Insight episode today. Tell us how people can find you, David.
They can find us at our website at landvaluealpha.com.
And is that also your Twitter handle here too, I guess, or an X handle?
I think it's an X handle. We're not super active yet on X. So I would say, the website is the best place to start. From there, somebody can send us a message. They can go to our investment portal, etc.
And you do have a newsletter, correct?
We do have a monthly newsletter, just came out again this morning, comes out once a month, and it's talking about something analytical related to land and water rights. So it should be quite educational. It's only about a page, so nobody will fall asleep.
All right, cool. Maybe we can publish those on our website. It'd be kind of cool. If
That'd be fantastic. Thank you, Mosh.
it'd be great, great. All right, well, this is awesome. Well, thanks, David. This has been great. Maybe I'll see you in Montana someday. I don't know.
Thank you, Mosh. Thank you for having me.
Thank you, man. Thank you. Bye
Appreciate
bye.
it. Bye.